I can't believe I did that.
Hi everyone, today we'll be talking about market structure and how to identify a trend based on what the price action is telling us. Pretty basic concepts for the ones that don't yet know what's a trend. We only have two types of trends, a downtrend and an uptrend. This is called a bearish movement or a bullish movement when we are on an uptrend. On a downtrend, we are looking for lower lows, lower highs, lower lows, lower highs. And on an uptrend, higher highs, followed by higher lows, higher highs, higher lows. This is really important to have clear definition of where the market is, so we can follow the trend by either entering a short or a long position. When we are looking into trends, we have to keep in mind that on different time frames we can have different types of trends. So if we are, for example, on the daily on an uptrend, the daily itself can have a moment where on the 4 hours we are having a downtrend. So we will have lower highs and lower lows. And on the 4 hour as well, we can have a moment where we are having an uptrend on the 1 hour. So we need to be aware of where the market is on different time frames so we can execute our trades on the best possible way. We'll take this as an example. Imagine that the price is making lower highs and lower lows, okay? What do we need in order for the market to reverse for an uptrend? So let's imagine that we are on the 4 hour or the 1 hour, okay? We clearly can set a downtrend line. So 3 touches, and the market is continuing to respect its structure. So let's say we break the support, becomes resistance, we break the support, becomes resistance, and we create this market structure. Everything that is inside a trend line or a support or resistance or a psychological level, we can consider structure of the market. Why? Because if we break it, we consider a break of structure. And this is the first thing that we will need in order to reverse from a downtrend. So first off, we are making lower highs, followed by lower lows. So first thing we need to see in order to reverse from a downtrend to an uptrend will be a clear break of the trend line, a clear break of the previous lower high. So we will be making a higher high relative to the last one. So second thing will be the creation of this higher high. We will be waiting for the market to reverse. So we will only have the confirmation that the market is ready to reverse from a downtrend to an uptrend once we clear the previous high, we break out of this downtrend, we retrace, and as a confirmation we can use the Fibonacci, and we can take the previous low, for example, as a support zone that the market might reverse to, and then the continuation for higher highs and higher lows and higher highs. So this is the concept that we need to keep in mind in order to reverse from a downtrend to an uptrend. We will always have these 4 steps, which is first, break the trend line. Second, create the higher high relative to the last one. Third, retrace and respect the previous support or a level that's been respected with several wicks or body candles. And a respect of the Fibonacci and the creation of the higher low relative to the lower low created as the bottom of this downtrend. And then the continuation and the expansion for the upside. So where would we enter this trade? Of course, if we are looking into longs, we might have this zone as our long entry zone, but if we enter here long, here long, here long, here long, here long, here long, the market will take so long until it's ready to develop that probably with all the movements that happen between this space of time will be taken out, and our psychology will be completely crushed by the manipulation of the market. So we will need to wait for all these confirmations in order to observe what's happening inside this zone for us to enter a long position and be ready to catch this movement. So how would we do this? So taking this example, let's say we are now on the 15 or the 5 minutes time frame. And let's take this zone over here, this downtrend, and let's copy paste this. So now let's take the example of here being on the 4 hour or the 1 hour, we are having this downtrend, and we've seen the market create this higher high and create this retrace into this support zone. So let's say that this retrace over here is now this that is happening on this side. So we are creating lower highs, lower lows, lower highs here, lower highs, lower lows, lower highs. And we will see the market break out of the downtrend on the 5 minutes over here on this zone, respect the Fibonacci on the retrace, and this is where we will be entering our position, protecting ourselves with the stop loss below the previous low and with our take profit on a resistance level of previous resistance. So this is how we will go about finding the trend of the market, if it's a downtrend or an uptrend, so we can decide either to take a short or a long position. We need to be aware that the market might have different structures on different time frames, so we need to create a narrative inside our heads of where the market is more due to go next, and take all these steps in order to not get trapped by the market and only operate, only take the trade in the exact moment before the market is ready to expand. And we only do this by observing the structure, by observing the clues that the institutions are leaving us. If we are breaking the previous high and the downtrend and we are creating a higher low relative to the previous one. So all these things, we will be watching it in the market in real price action, and this is clearly the best indicator we can have in order to trade the markets. So the same way we have this for finding long positions, we can also invert the chart, and this is the same pattern, the same steps in order to find our short positions. If we are on an uptrend, we would be looking for higher highs and higher lows, and then the break of structure, the retrace for the Fibonacci, we would protect ourselves on the previous high, and we would let the market continue its downtrend move after reversing. So this will be all for the market structure video. I hope you guys took something out of it and are able to set more clear targets and clear setups on your trading. If you enjoyed these videos, please leave a like and subscribe to the channel. We will try to make more videos like this, short and simple, to make your trading more clear. And if you have any suggestions, just leave a comment down below. Hope you guys have a profitable week, and see you on the next video.